Okay, allow us to begin. First and foremost, to all the agents that are here today, thank you, thank you, thank you. I understand clearly how valuable your time is, and for you to spend it here this morning with us really means the world to me. So I want to first and foremost thank you. Know that everything that we try to invite you to, we are very conscientious about it because, of course, how valuable your time is as salespeople. So we always want to make sure it's very clear, very concise, and that you walk away with real value each and every time. We're expecting a lot of visitors here today that I have not had the amazing fortune of meeting, so allow me to reintroduce myself quickly if I can. My name is Matt Weaver. I am 21 years in the mortgage origination field here in South Florida. I've had the amazing fortune of helping just over 11,000 families here in our market, and it's been a wonderful career, and I love what I do. Have an amazing team of 32 that work alongside me, all in different seats in different parts of our group, and without our team, we would not be able to deliver the service levels that we deliver consistently to you as real estate agents. And I'll touch on that in a little bit. Okay, I'm going to review my notes here down here at the bottom just so I can stay on cue and stay on point. It's interesting, folks, because the truth of the matter is that this is my third lending cycle. Now, what do I mean by that? I'm not saying third real estate cycle in terms of values. I'm talking about third lending cycle. And so the reason I'm mentioning that is because if we date back to, of course, 2001, or I should say September 11th, that was some challenging times there, of course, with that tragedy and in the lending markets. If we look at, of course, the Great Recession in 2008, those were some challenging times, of course, and particularly in the lending markets. And here we are today with this pandemic, which, of course, is some really interesting times. But what's so fascinating is when we enter these times, it's for a different circumstance, but the reality is that nothing has changed in terms of lending, meaning what happened those last two times is happening today. So it's like deja vu a little bit for me because what I'm going to tell you today, I was telling wonderful real estate partners of mine 10 years ago or 11 years ago and almost 20 years ago. So let's get right to it. I have two words that I would love for everyone to write down and understand these two words and own these words at a minimum for the balance of 2020. These two words single-handedly can account for anywhere between 20 to 40% worth of business loss for you as an agent, literally. Whether you're on the listing side of a transaction or whether you're on the buy side, whether you're 30 years in the business or whether you're brand new, whether all you do is listings, these two words right here are going to and can impact your business if you do not embrace them and understand them. And I mean that sincerely. And the two words, folks, is overlay restrictions. Let me repeat that. Overlay restrictions. Okay, what is an overlay restriction? We first have to start there and understand those two words. And an overlay restriction is the following. Okay, so we all know that Fannie Mae, Freddie Mac, and Ginnie Mae control conventional, FHA, and HUD as well, VA lending. Okay, so we have conventional, FHA, and VA lending. Now, let's think about this for just one moment. If FHA allows for a certain credit score requirement, a lender can step in and say, I understand that FHA will allow that, but I'm going to place an overlay restriction and we're not going to go down to that credit score. Or a lender can say, I understand that a debt to income ratio can go all the way to 49.99% for conventional financing, but we're going to implement an overlay restriction and cap at 40. So basically, folks, what this means is that Fannie Mae, Freddie Mac, Ginnie Mae, and HUD, et cetera, they have what's called minimum guidelines, minimum standards. And so when markets get tight, when lenders get fearful, what can end up happening here is that the lender can make a decision to in turn add what's called an overlay restriction. Think about that, okay? And if you look at it right now, what's happening in today's world, just like it happened at the Great Recession, just like it happened September 11th and so on, lenders are adding overlay restrictions in mass form. So what are the overlay restrictions and where do we start? Let me first start off with FHA. Okay, well, there's a bug flying around. I think I got him. No, I didn't. Okay, let's get back to it. So let's first start off with FHA. Now, first and foremost, FHA's minimum standard, which has not changed, is a 500 credit score with 10% down or greater, and with a 3.5% down payment or greater, a 580 credit score. Period. End of story. That's what FHA's minimum standard is. However, many lenders, and folks, when I say many, I'm not talking about just the retail banks. I'm talking about local household lenders, lenders that perhaps many of you refer to today, have implemented overlay restrictions primarily through credit score. Now, I want you to think about that. Primarily through credit score. So FHA says we'll go down to a 580 credit score with 3.5% down, but many lenders have implemented a 640, 660, and as high as a 680 credit score. Folks, when you implement those credit restrictions, that cuts out a gigantic portion of the buyer population. So that lender is saying, we're not going to go down to 580, we're going to stop at 680. Think about that. Okay, now, if you can understand that that's not all lenders, okay, we at CrossCountry are one of a handful, okay, we're a few now at this point, that have not implemented any overlay restrictions as it relates to FHA financing. And folks, what I can tell you, and I said it and I try to scream from the mountaintops, as of 2 weeks ago, I said single-handedly for the month of April and May, there will be more declines issued and more transactions that will fail that do not have to fail unless people are paying attention, in terms of real estate agents, are paying attention to what's happening. Folks, we have now saved 19 transactions that were under contract, that have gone through the lending process, and that have been declined days before closing. 19. And it's interesting because the truth of the matter, I gotta get this bug. The truth of the matter is that the listing agents were reaching out to us just on a whim. They were like, hey, Matt, I happened to see your Facebook post, and I see that you go down to a 580 and I got this credit denial. Is this really the truth? So they have saved it on a whim. And so we're saying to ourselves and our team, like, oh my gosh, how do we get this information out there? Because here's what's interesting. We ran the numbers. There's about anywhere between 6,000 to 7,000 FHA transactions that close each month in the state of Florida. And what we did was we microed down these numbers in geographic areas and by credit score, and by these lenders implementing these overlays, the lenders that you know of, these household names, they account for anywhere between 1,300 to close to 1,500 declines should be issued in our region here this month. The question becomes, will it be one of your listings? Will it be one of your buyers? So understand that it's an overlay that these lenders are choosing. Okay, let's move on to conventional financing. Well, okay, I don't name lenders because I don't think it's professional. However, I can name this lender because they sent out a press release that I'm sure most of you have read. So when you think about conventional financing, the minimum standard is a 620 credit score. And there are plenty of programs with as little as 3% down. Okay, JP Morgan Chase announced, one of the largest mortgagors, announced that starting Tuesday, yesterday, you need to have a 700 credit score and you need to put down 20% or greater. Think about that dramatic overlay. Think about that. Remember, the minimum standard is a 620 with a 3% down payment, and Chase said we need a 700 score or better with 20% down. How many pre-approved buyers over the past 90 to 180 days have been pre-approved by Chase that are out looking today, that are out there with the assumption that they still qualify? How many are under contract or about to get under contract today? It's a huge number, folks, a huge number. Most of all of the other retail banks have implemented some type of overlay as it relates to conventional as well. And a lot of local lenders have also implemented some overlays. Some of them may not be as extreme to Chase. Some of them may say, well, we want a 10% down payment, or we'll cap at a 680 credit score. But the goal here, folks, is to be working with a mortgage company that has minimal or no overlays at all, following whatever Fannie Mae, Freddie Mac, Ginnie Mae, and HUD will allow. And that's where we stand. That's where we sit. So on the conventional side of financing, things have changed virtually overnight. That JP Morgan announcement was just 48 hours ago. I believe it was actually on Sunday that it came out. And many of the larger banks are also following suit. Big changes with conventional financing. Okay, what about jumbo mortgages? So these are mortgages that are loan amounts in excess of $510,400. Okay, so loan amounts in excess of $510,400. Folks, for the most part, in almost every aspect, jumbo is almost extinct. Almost all lenders out there, I mean, a huge portion don't even offer the product anymore. It's that tight. We at CrossCountry Mortgage, we have lost several investors as well that we typically can sell off to, okay? The good news is that we still have several because we have that versatility. But I can tell you that that product has changed overnight. What's happening in that space? Well, if you have a transaction that's under contract, if you have a listing or what have you, okay, if that lender's still offering that product, the borrower, the buyer is going to go through more hoops. The investors are very skittish as to what's happening right now because these are large loan amounts and they're not backed by the federal government. So these are private sector investors that are giving money to potential homeowners that could be unemployed at some point very soon, God forbid, that could be detrimentally affected if they're self-employed. There's so many factors. So they're saying, wait a minute, we haven't closed this just yet. Let's go ahead and ask for more conditions. Let's go make sure that this buyer is very strong. So jumbo financing is very bleak to be had. It still exists, but bleak, very rare. I want you to think about that. Okay, listing agents I wrote down. Gosh, listing agents, okay, I have to tell you, you are at a huge risk in today's market. And the risk is of course, who you're looking to accept in terms of offer and who that buyer is pre-approved with. And that's always been a risk, but today's environment is now magnified tenfold at an absolute minimum. So a couple things when you stop and think about this, okay? First and foremost, most lenders that don't necessarily pre-approve people the right way issue pre-approval letters that are 2, 3, 4, 5, 6 weeks old. So that buyer is walking around with that letter that's not dated in its most current form. So here you have, let's say, a buyer who was pre-approved by Chase 2 weeks ago or as little as a week ago, where they allowed less than a 700 credit score. And they go make an offer on your listing. What happens there? Think about that lag effect. I mean, I can't imagine the challenge that an agent has to go through when they have to go ahead and get their contract signed by the seller. And then once the contract is signed by the seller, 2 weeks later, come to them and say, we can't close the transaction. All of something that could have been avoided. So how do we avoid those scenarios? We avoid those scenarios by asking those 10 questions that we can send to you. We compiled the top 10 questions as to what listing agents should ask the lender before having their seller accept the offer. Something that's so important. And here, watch this. Just call our team. The wonderful listing agents in the area know that they can just give us a call and bounce things off of us all the time. It's not, we don't have to be involved in the transaction. Just give us a call. For those that know us, know that they can call us anytime and say, hey, have you heard of this? What do you think about this lender? Because here's the deal, folks. We have a list of all the lenders that have implemented some significant overlays, now I can't distribute that, that wouldn't be professional, okay? But we can talk about it in terms of who's doing what for the most part. So it's something to really consider as a listing agent. We have to protect ourselves. As a buy-side agent, my gosh, you have some equal risk here too. I know that the showings are kind of turning virtual here, but still, it's still your time that's at stake. And if you stop and think about it, these buyers, most of them are just not getting pre-approved the right way now more than ever. Why? Because most loan officers are inundated with refinance business. So what they're going to do is they're going to print off a pre-approval letter, not really look at all the documents in its entirety, and tell them to go out and find a house. And once you get under contract, I'll work on the deal. And it's unacceptable. You don't want to work that way either. In fact, you can also ask these top 10 questions to lenders as well before working with a buyer, just to ensure. Do you know how simple our pre-approval process is? And it operates 7 days a week from 8 a.m. to 9 p.m. if you want to use it. And that'll give you the clear, concise answers. Okay, so I also wrote down opportunity for buyers. Well, folks, interest rates, once again, are sitting at historic lows. I mean, the money factor in terms of what it costs to borrow today has never been cheaper in our careers. I mean, think about it. I'm 21 years in the industry. And if you think about what an amazing opportunity that is for a buyer today, I made a video. I want you to hear this. I made a video called The Rental Factor Game. And what we did was in the video is we said, okay, if someone paid $1,500 a month, this is how much house they could buy. $2,000 a month, this is how much house, $2,250, and so on. Well, so many great agents shared that video to their database and have gotten leads overnight. We pre-approved the buyers. Because folks, it hasn't changed. Buyers are unaware of just how simple it is to buy a home. Think about that. Buyers are unaware of just how simple and how cost effective it is in today's environment to buy a home. So there's a lot of opportunity. Let me tell you about our advantage and what we're doing with a lot of our agents, okay? First and foremost, if you are on the list side or a buy side deal and you get a decline from a lender, don't accept it, meaning call us for a second opinion. We are getting called every day. We have the facility, we have the staff members to support you. Okay, our service levels have not been compromised or have not changed this entire time. It's the same process. And what we can do is we can scrub it, meaning that buyer, up against all the guidelines. And I can tell you, if we can't do it, no one can. And that's a strong position to be in today's world. Look, I love CrossCountry, and perhaps there's just a little bit of luck as to why I'm here right now and why we don't have these restrictions. But you know what? We're going to run with it, and we're here for you. So if you get a decline, whether you're on the buy side or list side, run it by us. There's a strong likelihood we can save the transaction. The next advantage that we can give you is, think about this now, closing quickly, okay? Now, this bars out any type of condominium transactions, let's just say, because sometimes there's a lag time with the associations. But folks, we are still facilitating in scale form 7-day closings. Now think about that power. You have a buyer, okay, they saw your video on just how simple it is to buy. They need closing cost concessions. They fell in love with a vacant house. What if we could tell the seller that they could have that house sold in 10 days, in 8 days? Do you think they'd give up some seller closing cost concession? Think about that. That's strength. And we can do that. We can beat out cash buyers, and we can certainly beat out financed offers by that speed and that execution. I had a wonderful real estate partner of mine the other day. They found their dream home. He's an agent, and he found his absolute dream home. Calls me up and says, hey, Matt, here's what I'd like to do. I'd like to go ahead and set up a 12-day close, because that's going to get this house under contract. And we were there for him, and we made that work. So speed and execution is huge in today's environment. The other piece that's available to you, whether you're on the list side or buy side, okay, if you're getting an offer and you don't feel that strong about it, okay, and the other side is willing to do this, leverage our pre-approval process. It's 7 days a week. It's 8 a.m. to 9 p.m. We take a 10-minute application by phone. We gather the items. Our typical review process is 2 to 4 hours. It might extend to 24 hours depending on the severity of the case. But you can use it without us getting the transaction. We don't have expectation of getting that loan. We're here as a service for you and the real estate agent community. If we get the transaction, great. If not, and we did you a service, we did our job. So leverage our pre-approval process. The last thing I wrote down is for all the wonderful attendees, if you aren't currently using our services and have another lender that you like, to protect yourself, we came up with the top 5 questions that you should ask your lender. And these questions are going to let you know, right, who you should be referring. Because folks, here's the deal. If your lender right now today has multiple overlay restrictions of 100 buyers that you could interact with, you can safely count out 30 or 40 of them that you can't work with because they won't fit their box. And it's not fair to you in terms of sales, and it's certainly not fair to the home buyer. So I want to conclude with thanking each and every one of you. I know this is a hard time for all of us, myself included. Our thoughts and prayers are with the world, okay? The world has this issue at hand. And I want to let you know that we are here for you 7 days a week, 8 a.m. to 9 p.m., myself included. Give us a call if you have any questions or scenarios, or if you want to talk about how you can reach out to your database and we can help you with that, how we can strum up more business together. We're here for you. I have the support staff to help you and to serve you. My direct dial anytime is 561-864-2458. Together in success.